Assalamualaikum warahmatullahi wabarakatuh, and hello to everybody. I'm Abdul Halim bin Hafidz with my group members Haziq, Izzat and Ismail. This video is about Islamic financing contract. Islamic financing contract is an action to bind between two parties which using Islamic principle where prohibit from any elements of riba, gharar and maisir. So let's get started.
Definition of murabaha. A murabaha is a sale of goods at cost plus an agreed profit markup. Its characteristic is that the seller should inform the purchaser of the price at which he purchased the product and stipulate an amount of profit in addition to this. The murabaha conditions. First, the Islamic bank should make the cost or capital outlay known to the client. Second, the first contract should be valid. Third, the contract should be free of usury. Fourth, the Islamic bank should disclose any fault which occurs after the purchase and should disclose all what is related to the fault. Lastly, the Islamic bank should disclose the terms applicable to the purchase price. For example, if the purchase was on credit. Types of murabaha. There are two types of murabaha contract. First is ordinary murabaha. Second is murabaha to the purchase order, or in other words, MPO. Ordinary murabaha. A contract which the seller is an ordinary trader buys a commodity without relying on any prior promise to purchase or sell, or without a purchase or sell undertaking. After that, it resells it on a murabaha basis. The customer has no obligation to purchase. The second type of murabaha is murabaha to the purchase order, or as known as MPO. It involves the sale of a commodity through a murabaha contract to the MPO for a pre-agreed selling price. This transaction includes a prior promise to buy or a request made by a person interested in acquiring the goods on credit from any financial institution. The payment is payable within a fixed future date by lump sum or fixed installments. The customer obligated to purchase the item. The example is Ismail as a buyer and Halim as a seller will enter the murabaha contract whereby Ismail will buy a laptop at cost plus agreed markup.
Ijarah can be simply mean leasing or hiring of asset, agreement between two parties where one party, the owner of the asset, give possession of the asset to use for other party. There is two types of ijarah. The first one is operating lease. Second one is financing lease, also means of ijarah muntahiya bitamlik. Operating lease is hard to found in Islamic banking due to high risk. However, several Islamic financial institutions which is not bank offer this concept. For example, bank will buy the asset such as factory machine and lease it out until at the end of the period. At the end of the period, they will find new lease or sell it and will gain profit from it. Finance lease or ijarah muntahiya bitamlik is normally used by Islamic banking to help customer to get their desired asset or cash money. The bank will buy the asset with cash and then lease out them to the customer. The ownership remains to the bank until at the end of the period. Full ownership will transfer to the customer at the end of the period.
For example, for Ijara, the bank will act as lessor and they will lease out motor vehicle. They will set the terms and conditions and then sign the agreement and then pass on the lessee to see whether they agreed or not with the agreement. For operating lease, there will no transfer of ownership at the end. For finance lease, will be transferred at the end. So that's complete the contract between them.
Buy Vitamin Ajil. Buy Vitamin Ajil is a sale contract which the payment of the price is deferred. The goods requested by the client are bought by the bank, which subsequently sells the good to the client for an agreed price, including a markup for the bank. The client may pay by installment within a pre-agreed period or in a lump sum. This sales works in a similar way to a Murabaha contract but with deferred payment. So this is a contract between a banker and a client, where at the right hand side is Amirul Izzat as a banker and at the left hand side is Haziq as a client. Both parties will sign the agreement and the goods, which is car, will be transferred to the client. On the agreed period, the client will make the payment either in installment or in lump sum.
Mudarabah is a profit-sharing contract in which one party, which is called Rabbul Mal, provide funds to the other party, which is called Mudarib, for his management expertise. The profit are shared between the Rabbul Mal and the Mudarib in a proportion agreed in advance. For the losses, it will be the liability of the Rabbul Mal, unless the Mudarib is proven to be guilty of willful negligence, fraud, or a breach of trust in handling the funds, and he is totally responsible for the losses. This is the example of Mudarabah contract, which involve Rabbul Mal and Mudarib. When the agreement has been made, the Rabbul Mal will provide the fund to the Mudarib, and Mudarib will invest it to obtain profit. When the profit has been made, the mudarib will share the profit as agreed in the contract.
Musyarakah. Musyarakah is a contract between two parties or more as capital provider as well as entrepreneur. Both parties contribute equal or varying amounts of capital to establish a new project or share in an existing one. Capital can be on permanent or declining basis and will have his due share of profits. Partners share proportionate losses according to the capital contribution and not otherwise. This is a musyarakah contract between all partners, which is Amirul Izzat, Ismail, Haziq, and also Abdul Halim. All the partners will sign for the agreement that make them contribute in capital as well as being entrepreneur of the company. The agreement states the agreed capital contribution of all the partners and losses that will bear by them if the company is solvent or bankrupt.